Welcome, everybody. My name is Geoff Green. Thanks for joining me for the February 2022 housing market update, where we take this very complex idea of the housing market and how it impacts you in your day-to-day life. And we boil it all down into about a 20-30-minute discussion so that you can move on and really fully understand what's happening with your most precious asset or your most desired asset, your home. So let's jump right in. Give me 1 second to set up my slide deck here. That's a quick look at our panel, who we're going to be talking to in just a little bit. But let's talk inflation because it's important, it's happening, and it impacts homeownership. So let's talk about how it does impact homeownership. So it's a well-known fact that real property is a very good hedge against inflation. In other words, it helps to have real property in an inflationary market because your asset is going to increase along with every other cost that's out there. So you should be able to, continue to build wealth in inflationary times when you hold real property. All right, so there's a quote from an Investopedia there, which basically says that, unlike paper assets, real property tends to hold its value. So that's the good news. Here's a look at the US inflation rate over the last 10 years. And this is why I know that there's a lot of people, just day-to-day people that I talk to, that are starting to see inflation hit their pocketbooks, most notably at the grocery store. And this is the reason why, right? Because when it's on a 10-year basis, when you look at inflation on a 10-year run, it's extremely high right now, and it's rising, and it doesn't really seem like it's going to be, stop. I guess the rise is not going to stop anytime soon. I feel like inflation, from what I read and what I see, it doesn't seem like it's going to end anytime soon. So the reason why you're feeling it in your pocketbook is because we're at an almost 8% inflation rate. And that's a general rate, right? When you break it down into different categories, you start to see energy is really way up. So hopefully our government here in the US and around the world can try to get these things under control, because at the end of the day, it's those who create the fiat currencies that can control it. Now, here's a look at the inflation rate since 1920. And you'll see that, we've been through worse, right? We have been through worse. But regardless, you can see that this is a pretty big spike, historically speaking. I mean, even, when you come back to the 1980s, this is the biggest spike of inflation that we've seen since the early 80s. Obviously, there was a massive spike back in the 1970s. I was really not yet born, certainly not yet coherent enough to understand what was going on during that time. But there were two major spikes during the 70s, as you can see. It doesn't look like our spike is yet that big, but that's kind of what we're looking at. I mean, this is a very substantial increase historically, but not as bad as it was back during those times. So I'm trying not to be an alarmist, but I'm also trying to make the point that inflation is a serious problem, and we got to keep our eye on it. Okay, so here's a really cool graph that takes a look at the value, the inflation rate during each decade from the 70s through current, okay, through the 2010s. And then we have individual years here in 2020 and 21. And it just basically shows how inflation was rising compared to home price appreciation, okay? And you can see that basically in every decade since the 70s, home price appreciation at least kept pace with that of inflation, if not exceeded it. And you can see in the 2010s, it far exceeded the inflationary numbers. 2020 far exceeded it. And even where we are now, the full year of 21, there was a massive increase in the house price appreciation versus inflation. So again, real estate is a great hedge against inflation. All right. So let's keep moving on here. Now, I'm going to read this statement in full because it really is an important note for everybody to understand. Okay, so let's just walk through this together. A fixed rate mortgage allows you to maintain the biggest portion of your housing expenses at the same payment. That's big, right? Because assuming that you have a fixed rate loan, that payment is going to stay the same. So property taxes will rise and insurance costs will rise. So, maybe once a year you have some small incremental increases, but by and large, it stays the same. But your monthly housing payment remains the same, meaning the principal and interest. That is certainly not the case if you're renting. Okay. And that is a really important point to make, is that, when you're a renter, the advantage that you gain is that you can move easily. The disadvantage that you have is that you're really not in control of where you live. Okay. So it's important to own your home if you can. If your life is not transient, it's one that you can remain in the same place. Your goal should be home ownership. All right. And if you already own a home, you're in great shape. That's a good thing. So one of the things that, you'll start to see is that rent does increase greater than inflation in most years. I mean, look at this variance here. Okay. This is from 1973 to 2020. Okay. So we saw before those massive spikes in inflation in the 70s. And you can see that rental price appreciation. I mean, pretty much in every situation, rent went up over. So this blue line here is the core inflation rate. The green line is rental price appreciation. So pretty much went higher. So again, owning your home is important. And here's what a lot of the experts are predicting as a cumulative appreciation by the year 2026, right? So 4 years from now, the optimists, the people who think, things are really going to go well, think there's going to be over 62% house price appreciation by 2026, okay, within 4-year period of time now. Now, this was forecasted. All these were back in the fourth quarter of 21, so relatively recent. The pessimists think that there's going to be a 23% increase in real property. So even if you go lower than that and say it's 10%, it's still a reasonably good number. And I think the reality is the truth lies somewhere in between. So I think we're in a very good appreciating market. And I do agree with those numbers. Let's talk about mortgage rates, which is another big force, because as the 10-year treasury bond, which we're about to see, well, let me talk about that when we get there. So 30-year fixed rate, the reason why this chart is important is because it shows basically right when the pandemic hit, okay, where rates were. In other words, before the world got turned upside down, where were we? The 30-year fixed rate was about 3.7%. We're about 3.55 right now. So after, the 2 years of pandemic era, we're almost back to where we were before it started. I think that's very important for people to understand, is that, yes, we are in a rising mortgage rate environment, but we're no higher than where we were pre-pandemic. And we were talking about historic lows, okay, during the pandemic as far as mortgage rates go. So to see mortgage rates come back up is not an alarming thing. They need to come back up. They could not have remained as low as they were. It just wasn't going to happen. All right. And then here's another look at just current mortgage rates compared to the last 5 decades, right? So here's the current rate of 3.55. You can see in the 2010s, the average rate was 4, which was historically very low. And you start walking back previous decades. I mean, the next closest, measure was 2.5 points almost over the 2010s, and that was 2000. But, you go back over the history of when people were buying homes in the 70s, 80s, and 90s. I mean, their rates were significant, double digits in many cases. I mean, there were people back in the 80s that were getting 19% interest rate loans, So we're still at an unbelievably good number right now. And there should be no reason why anybody should hesitate to make the purchase of their home based upon mortgage rates right now. I mean, that, you're fooling yourself if you don't think that 3.55 is a good rate, or even 4.5 for that matter. Those are good rates, historically speaking. Okay, so what's going to happen naturally is that as mortgage rates rise, there's going to be a moderation in housing demand, right? Because what's going to happen is, as rates rise, that means that the monthly carry for a home goes up, and that's just going to eliminate certain people from being able to buy a home. And then it's going to eliminate people's needs to get into another price bracket. So it is going to temper housing demand, but that's okay because there still is so much demand and so little inventory that we almost need an equalizing factor, which is going to be mortgage rates, basically. All right. So there's another quote by chief economist of Freddie Mac. So forbearance, here's another interesting thing to take a look at. And we have been talking about this over the last year here at the Housing Market Update. But this is basically all of the loans in forbearance, right? And right now it's below $1 million, which is a very low number. And you can take a look at where we were, again, at kind of the start of the pandemic. 4.7 million homes were in forbearance, and now it's all the way down to 0.78. Okay, so there's not a big scare in any way, shape, or form right now about foreclosures. And if you're hearing from anybody that, oh, there's going to be a whole huge windfall of foreclosures, there's nothing to prove that statement to be accurate. So right now, as far as forbearances and mortgages goes, the market is in strong position. Okay, so basically this is saying that 89% or a vast majority of single family homeowners who sought financial assistance have exited those plans altogether. So it's a non-factor, forbearances. Here's a pie chart to further the point here, that when you take a look at all of the green sections here, right, these are the people that are out. 38.1% of them are out and have paid in full, or are back on track making their mortgage payments with no sort of deal needed from the bank. 43% of the forbearances are in some sort of modification or workout plan, okay? And then only 18% are the people that are still in need of some sort of help, so on and so forth. But I can assure you that there's plenty of demand from buyers to grab those homes if they can get them. So the people who may need just to get out of their homes, should be relatively easy for them to do that at this point in time. And then again, take a look at the historic foreclosure activity, right? You can see during the financial crisis, look at how high those numbers ran, especially in 2009 and 10, where there was just a huge glut of foreclosures. We're nowhere near that right now. I mean, we're historically very low right now. So again, just nothing really to be concerned about as far as forbearance foreclosures. So let's take a look at the stats like we do every month, just to, I like to give these stats every single month just so that you can see where they're going and I can see where they're going as well. But basically 21, we're looking at the full year of 21 versus the last 4 years prior to full year numbers. These numbers are national aggregated numbers, so it takes a little bit of time to get out. So we're usually 2 months behind on those, and that is the case here. So basically the takeaway is that as far as the number of homes sold, which is what we're seeing here, it slowed down a little bit. You can see during the lockdowns and shutdowns in 2020, there was a huge, decrease. Then it shot up, and there were huge numbers during this time. And then we still started out in a big way in 21, but it kind of settled down. You see the numbers are starting to fall down below this orange line. But more importantly is, where were we pre-pandemic, right? That's the blue line. So there's still a great variance, right, between the pink and the blue lines. So it's still a much more robust market than when the pandemic started, okay? And here's annual home price appreciation. And again, the reason why you're not seeing this pink line dip down below the orange line, which is 2020, is because there is such an inventory problem. There just is not enough homes to satisfy the demand. So you just fall back on simple supply and demand. If there's not enough supply and there's a lot of demand, prices go up. Economics 101. All right. Months supply of inventory. And this really still is the story overall, is that inventory is getting tighter. These lines kind of crossed over here a little bit, but it's just tight. It's really tight. There's no, shadow inventory sitting anywhere that's going to come back on. So it's just a matter of people being willing to put their homes on the market. And I'm sure a lot of people are nervous to put their home on the market because they don't know where they're going to go to. All right. So the next housing market update is going to be Tuesday, March 15th. You will be notified about that if you stay connected with us through HM Update. And we, will come at you at noon on March 15th. And a special thanks to our sponsor, NewOp, the Business Opportunity Exchange. You can go to newop.com at any time and see a live feed of real estate and mortgage referrals. Okay, so let's get over to our panel and check in with everybody and say hello. How are you guys? I see Carol up first. How are you, Carol?
Good. How are you doing?
Good. We also have Chad Barris. Chad, welcome.
Good morning. Happy Valentine's Day, everybody.
Yes. You just gave it away that we're pre-recording this, Chad. So thank you for that. I appreciate that.
We were doing so good.
We were. I was
I just have so much love for everybody.
He's a lover, not a hater.
We'll slip that one.
All right. So, Chad, let me start with Carol and Keren here, and talk to them about, the real estate side of things. And then we'll get into the mortgage side, because there was the presentation today was heavy on mortgage, So Carol and Keren, just the first question that I have is, how are things going out there? Are we seeing, as it stands right now, it's mid-February, call it, and it's really the start of the listing season. So how are you feeling about it? Are you getting as many calls you normally do, or less, or more? Let me hear from you. Carol, you go first.
Well, I have buyers that are very interested in buying the home. There's no problem there. There's still a lot of interest in buying homes. Mm-hmm. The problem is I don't have the listings that I need in order to keep that ball going. Right. I think people are in a wait and see state of mind right now. They're not sure where they're going to go if they sell. People seem to be in a holding pattern right now. So I'm hoping, give it a couple of weeks, once we get into March, that I'm hoping we're going to see more homes come on the market.
Okay. Keren?
On our side of the border, I actually see that we're getting more listings on a daily basis, which makes me very happy. I do have sellers that are on the fence that we're out looking at houses first before they list their home. So, for instance, I had one set of sellers. We found a house over the weekend and we listed their house today. So they're all ready to go. They just want to make sure they have someplace to go. But yeah. I've certainly not slowed down at all. I didn't hit winter market. I'm out every day showing buyers and doing listing appointments. It's just that those sellers want to hold off because, like you said, Geoff, they want to make sure they have a place to call home once they sell their home.
Yeah, totally understand. I would be concerned about that as well. Honestly, in a perfect world, you could buy your home first where you're going to, and then sell if you have the economic wherewithal, and that's one of the things I always tell my wife is, I'm like, look, I'm not moving until I can afford to buy my new home and then sell, because I know what it's like. Having done the transition many times, it's hard and it's a little bit scary at times, So just to give everybody who's watching some perspective, so Green Team Realty, which is who Carol and Keren are with, we service like the northerly suburbs of the New York City market. And Keren operates in New Jersey and Carol operates in New York. And I just wanted to explain that because Keren said on my side of the border. People might be thinking, is she in Canada? Is she in Mexico? Like, what border are we talking about? So it's the New York border. All right. So let's stay with you two ladies for a second. So Carol, if you can think back to February of last year, do you feel that there's as much, more than, or less than inventory coming on the market as compared to last year?
Right off the top of my head, I think there's less than there was last year.
So then the same would hold true for 2019, certainly less than back then.
Yeah.
Okay.
Yeah.
Keren, would you say the same thing, or do you feel like there's more inventory coming on this time as there was last year?
I think we still, even though we have some more coming on literally this week, we're still well below where we were a year ago and certainly 2 years ago.
Yeah. So the problem is being exacerbated, not solved,
Precisely.
Yeah. And it's, I guess, a little bit troubling because we still have supply chain issues, that the media hasn't even, you haven't heard that recently, but it's still very much going on. I was in, Kuchen Brothers the other day talking with the guys at the counter, and they're just like, their decking material still can't get it. They're sold out already. And I was just really happy that I didn't have any major construction projects to do on any of my properties because, I kind of got everything done before the pandemic hit, thank God. But yeah, there's still supply chain issues. And then you throw inflation into everything. And it's like, wow, this is a really complicated environment that we're working with here. So
it really is. I think for me, I also have investors on my side where I've had an investor make an offer was accepted, and he ended up pulling out because 2x4s went back up to $8.
Yeah.
So it's definitely prevalent, the issue we're having with the supply and demand, as far as the supplies for builders themselves.
Yeah, I think at the end of the day, what's going to happen is mortgage rates are going to keep creeping up. Inflation's going to keep going, and people just aren't going to be able to afford what they could before. And they're just going to not want to buy a home. They're going to lose their desire, which is unfortunate, because, it really is our goal as a body of realtors, right? To get people into their homes, because it's the cornerstone of the middle class's wealth building strategy is to own a home. Right. For all of the reasons that I cited before. It's an inflationary hedge. It helps you to not be in a turbulent rental situation. But I think what's going to happen is people are going to get exasperated by the whole thing. And that's what ultimately may lead for things to kind of start going on a downtick. All right, Chad, let's actually hold on. One other question that I like to ask every month is appraisals. It has to be tough for appraisers right now because they're seeing their comps at one number and the deal that they're trying to appraise much higher than the last one, right? Because we're in an escalating environment. Are we having any appraisals, Carol and Chad, you can chime in on this too, not come through? Are you experiencing appraisals not coming through for the agreed upon amount for the deals?
For me, I did not have, I only had one, and it was only off by a little bit. It was only off by about 8,000, but overall they were appraising. I don't know how, and thank goodness they did. I think somehow appraisers were allowing for the fact that prices were just going up so quickly. I think that somehow came into the determination because they praised.
Chad, you're seeing more transactions than any of us,
so I was going to lead off with that because, there's more transactions. Obviously, there's more of a percentage on my end. But to answer your question, there are a couple. I mean, it just, again, sometimes the appraisal is what somebody's willing to pay for something versus what the property is actually worth. So when it comes to that point, there has to be something embedded in the contract, the purchase agreement where, we're hedging those issues. But certainly there are a couple that are not appraising where we have to figure out the bridge.
Yeah. And I can the reason why I ask the question every month is because it's a really good indicator to me as to what the banks are thinking, so it doesn't seem like it's a major issue now, the appraisals, which means that the banks are still in agreement that this thing is the prices are going to keep rising. So they're playing ball at this point, right? But it will be interesting to see at what point when appraisals it's commonly not coming in, and now we're having to renegotiate deals, because that means that the banks are putting pressure on the appraisers and they're kicking it back and making, they're doing their own review. They're going to put more time into it because they want to be sure. They're going to kind of put a lid on things because they feel like the market's falling apart a little bit, that sort of thing. I mean, that's exactly what happened back in, call it 2009, 2010, 11. I mean, it was hard to get things to appraise back then, and it just made it difficult for the market to recover,
Well, here, even rewinding 2 years ago, when it started the pandemic, when the prices started to escalate so fast, there were major problems with the appraisers because the market didn't catch up as fast as the supply and demand. So it's almost as if we're kind of going through that again to some extent, not as bad as it was, but on the contrary, the downside of this, it's making it very difficult for these low down payment borrowers,
Right.
5%, 3%, even 10%, to compete with the higher down payments to hedge that under appraisal.
That's right.
So it's a ripple effect.
Yeah. Okay. So rates, Chad. I don't think anybody can say they're not going to go up. I mean, the 10-year Treasury yield is on the rise. The Fed has no choice but to keep raising, their end of things, because inflation is just rampant right now. So I think rates are going to continue to go up. I mean, your thoughts?
Rates are going to continue to go up as they've predicated the market's going to, 6 to 7 more increases of rates over the next year. So let's just talk about this ripple effect, right? So we're talking about investors, we're talking about lumber prices. I mean, with the Truckers Association, going on strike, how do all these building materials get to Kuchen Brothers? So if they don't have them, the prices are going to increase along with inflation. So here's another very difficult component is, let's say, the realtors have buyers that are looking for the last year. Well, if they were pre-approved, for example, at a 3% interest rate, and now the rates are at 4.25%, they no longer qualify for the $400,000 house that they wanted. Now we're down to, say, $350,000. Now the price is escalated, the interest rates have escalated. Now, like you had said, these people are just they can no longer find something that fits their needs or their affordability. So it's a serious ripple effect.
Yeah. Okay. Good. All right. So, does anybody else have any final comments? I feel like we've wrung the towel here. No, everybody's good. All right. So, let me show everybody.
Geoff,
yes. Go ahead, Karen.
I have one comment.
Yes, please.
I just want to remind sellers that this is the tail end of our greatly appreciated home values. If you have the ability to sell your home or something that you're interested in, certainly reach out to a local expert, an agent, someone who's been around for a while, and have them appraise your home. Sometimes we don't know that it's the end of it until it's stated. So I'm telling you here in public that if you want to sell your home, this is the tail end of it. So if it's something that you're looking to do in your close future, do it now rather than later, because we don't know what 2023 will look like.
All right, Keren Gonen's bold prediction. We're at the tail end of this appreciating marketplace. And there are stats to back that up, right? We're not in a depreciating market, but we're in a decelerating. The rate of appreciation is slowing, but it's still going up. All right, very good. So here's the contact information for all of our panelists. And these are all really solid professionals. I wouldn't have them here with me unless they were. So by all means, reach out to them and give them your business. Thanks for joining us on the Housing Market Update. We'll catch up with you next month. Thanks.